Let me show you my eyes.
Hey, welcome back, everyone. It is time for another red hot covered call video. Haven't been behind the mic in a couple weeks. I'll tell you, life is busy. But hey, we're right here, right now. I'm going to show you two trades. I'm going to show you a chart on Adobe for which I talked about a couple weeks ago where I sold a cash secure put. I'm going to show you how that trade ended up. And I'm going to show you a 3X leveraged ETF, a trade that I've had put on for over 45 days. Absolutely love it when I'm knocking down the profits. Now look, if you've never been to my channel, this is what we do. I show you my trades, we talk about them, so maybe you learn something. I offer up all my free tools on my website, ctpdashboard.com. They're free, homegrown spreadsheets, so you can track the numbers. You can keep your numbers in front of you, so you know when you're profitable, when you're writing cover calls and selling cash secure puts, you know when to buy back those options. I use one of my very own trackers for the TQ trade, for which we're going to talk about here in a moment. Now look, before we get going, absolutely love it that you go to CTP Dashboard. Right there's the free dashboard link. All you have to do is go there. The free dashboard helps you find and research your next great cover call candidate. And it's free. Absolutely love the dashboard. I use it myself. Now look, while you're there, check out my numbers. For a lot of you that's been with my channel, you know the goal this year is $55,000. Here we are in November. Man, I only have 2 months left, but look at that percentage gain. Cash on cash, 20%. Look at last year. I mean, are you kidding me? If you would have told me 3 years ago that there's a strategy for which if you learn, if you get your experience, you get comfortable with, you could be knocking down 20% a year, man, I wouldn't have believed you. Once I started it, once I did it, absolutely having this kind of success. And I tell you all the time, I don't do much heavy lifting. We put on our trades, we manage those trades, and then we do it again. That's why I created all the spreadsheets so we can keep those numbers in front of us. I tell you, man, I call it my cash printing machine. Now look, before I get going, if you like what you're hearing today, I want you to subscribe to the channel. It's right there and it's free. And hey, look, if you like this video today, bang that like button. It lets me know you like what I'm doing. Now what we're doing is this. I'm going to show you a chart of Adobe. Why would I show you a chart of Adobe? Because 3 weeks ago, I showed you a trade on Adobe for which I did a cash secure put. I used all of my indicators. Adobe had fallen to the point where I felt like it was a great opportunity to use a cash secure put. And that's exactly what I did. Now that trade is ended. I've cashed out that trade, but I want to show you where it's at now. I'm going to show you the chart that we used just 3 weeks ago to make this determination. And as you can see, Adobe is rocking it right now. It's trading at $292. Now I would tell you this, when I did this chart 3 weeks ago, it was not trading at $292. And in fact, you could see Adobe had been getting beaten down. Now, I love Adobe and it's been a part of my trading for the past 2 years. The reason I like Adobe, and again, this is not a prediction, recommendation, I don't do any of that, I'm not certified, but I want you to see the world through my eyes. You know, a lot of you out there really want to see what a more active trader sees when they go out and they find that next great stock. So this is what I saw. And as you can see, Adobe, great stock, always upping the game, right? Every time they have earnings, man, they come out and say they're going to have better earnings. And for me, they sit in this sweet spot of technology where they don't really have many competitors. I mean, they're in the cloud, they offer great products, and man, it just seems like they're growing and growing and growing. So for me, I'm going to keep it on my radar all the time. Now, with that said, they had been getting beaten down, and a lot of it has to do with the China trade war. And really, it's the overall tech sector that has been getting beaten down, unless you're trading Apple, right? Well, I'm always going to keep Adobe on my radar, and when Adobe got down here to 260X, I'm really watching it because I'm feeling good. This is where I believe Adobe has support. Now, looking at the breakdown of this trade, I really want to impress upon you. I'm showing you my trades. We talk about them, so maybe you learn something. The maybe you learn something part is looking at my process, right? Seeing the world through my eyes. So back when Adobe was trading at 265, getting kicked in the ribs, I'm looking at Adobe as an opportunity for a cash secure put. Right? It's going to have to meet all of my indicators for a great cash secure put trade. And what I love to use, and I've talked about this many times, look, I'm not a charting expert, but I use 3, 4, and 5 things that help me determine if I'm getting a low entry purchase on a stock or if I'm going to sell a cash secure put, I could be assigned those shares, right? So I'm always going to want to do this on the cash secure put side with all of my indicators being at a low entry purchase. Now, I I know this is a little fuzzy. The picture itself is actually a little smaller, so I tried to make this a little bit bigger. So please bear with me. Adobe's trading at 265 right here. I'm going to use a cash secure put here, thinking that I'll never be assigned the shares. Now I know for some of you out there, you know the definition of a cash secure put. You know that you put your money up. You tell the greater stock market that you're willing to buy somebody's shares at a certain price for a certain time frame, and you get paid a per share premium. Well, for most people, they don't mind being assigned the shares. But for me, I love the cash secure put as just generating a directional trade. So in this case, with Adobe getting pounded, it trading at 265, I'm going to use one of my favorite cash secure puts where I'm going to put a cash secure put price of 255 in the hopes that I was correct and the stock moves higher. Now, before we get there, it has to check mark all the boxes for me to do this. So the very first thing I love to do is check that RSI. I've always told you, under 50 on the RSI, we start to get into that oversold area. Now, Adobe at this point has an RSI of 44, so it's not oversold, but it's more oversold than overbought. So that's check number one. I love it. The second one is that Keltner channel. We talked about this all the time. It is not the end-all be-all, but for me, I love it because it shows a stock's trading range. Well, when it gets below that midline, see that midline right there? Look what happens. Wall Street seems to buy it up. And here we are again. Do you see where it's below the midline? So now that's going to check another box for me. I love it when I can play a stock below the midline because I feel like I'm starting to get value. Now, I love the OBV line. This is momentum, right? We want a sideways to upward chart here because it shows momentum. It shows there's people interested. And even though Adobe's getting killed, there's still momentum. There's still that upward momentum. So people in the greater stock market still buys Adobe. And finally, the support lines. Now, you can't really see because it's really fuzzy. But look, at 265, I always love to sell a cash secure put about $5 to $10 below support because I don't want to be assigned the shares. I want to give it a little bit of time where it can drift a little lower, but if I've picked it right, it'll drift a little lower and then head higher. And remember, as it heads higher away from my strike price of 255, right, that option's going to fall. I'm going to be able to buy it back, and that's going to be a crumb. I'm going to be able to buy that option back. It is a short-term directional play. I call it my cherry picking cash secure put trade. And in this case, that's what I did. When it's trading at 265, trust me, that says 265. I sold a 255 cash secure put 30 days. I got $4.25 for that. And what happened? I'm actually right. This stock is falling. I sell the cash secure put $10 under the current stock price to give me a little cushion, right? Because I want to play time. I want to play the fact that I think the stock could rebound. Because if Adobe gets to 255, man, there are problems in my book. So that's what happened. I get lucky, or maybe it's skill. Adobe turns around and heads higher. Then it gets really good news and it is off to the races. And that $4.25 option, remember, I gave somebody the right, but not the obligation to assign me their shares at 255. Well, of course, now with Adobe trading at 292, they're not going to assign me their shares at 255. And that option goes from $4.25 to 20 cents. 20 cents. And with no trade fees with Fidelity anymore, guess what? I buy that obligation back and I pocket the dip. That turns out to be a $400 short-term crumb. Now, I love those cherry pick and cash secure put plays, man. Those are some of my funnest. Love playing the cash secure put. Now, on the covered call side, I have been using 3X ETFs for the past year, and I love using them because I'm going to use it as a directional play, right? With ETFs that mirror a certain index, it's going to be a directional play on the stock market. So if the markets are falling near support, then all of the ETFs that track the indexes, the Dow, the S&P 500, the NASDAQ, they're all going to be trending lower near support. Now, I love to use the Dow because the Dow has some great support lines. Like when the Dow gets to 27,000, it hasn't really been able to break 27,000, so they always sell it off. The Dow will then fall to around 24x, and usually they start to buy it up. So over the past year, I've used those support lines to really play these leveraged ETFs on directional plays. Well, the last time the markets were down, the Dow near 24,000x, I went ahead and used the TQQQ, the 3X leveraged ETF for the NASDAQ. Again, it's a directional play. I think the markets are going to drift higher because we're going to come out of the lows and they're going to start buying the stock market up. So I'm going to use that as an opportunity. So as you can see, when the TQs was trading back here at 61x, the markets were actually trading near support. So that's when I love to get in that low entry purchase on my TQs. Now, with that said, I am very measured. I don't buy 9,000 shares of the TQ. I'll buy them in 100 share increments and I'll write covered calls on them because I will use them as they go down and as they go up. So in this case, I bought 200 shares of the TQs at 61.30. I wrote a 63.50 35-day covered call and I was able to get $3.05 for that. This is going to be an above 7% trade for this time frame. And I'm feeling comfortable, right? The TQs are bouncing off this support, and I just feel that it's going to go high. Many of you are sitting there saying, you bought the shares at 61x, you sold the 63.50 covered call. There's not much stock appreciation there. What do I always tell you? I love picking up crumb after crumb after crumb. And it's all about just setting your hurdles low so you have success. Because if we do this multiple times, we're going to have multiple success, right? So that's what I do with these leveraged ETFs. I don't really want to have that out of the money strike. I want my shares to be taken away, to be honest with you. And I reboot the next month and I do it again. With that said, TQs has been rallying with the rest of the stock market and I'm loving it because my shares are going to be taken away. I don't have to sweat it. But this is where I bought this option back earlier because I have no more fees with Fidelity. I'm going to mention this. This might go over some of you newer folks on the channel. What I want you to understand is we can buy back our options now at no cost if you're using a no-cost brokerage. Back in the day, an option had to get 10 cents or below before they would waive the trading fees, which made it profitable to buy it back when it was trading at 10 cents. Now, again, what do I mean by that? I got $3.05 for this option. If the stock were to fall, that option were to fall, and as it's getting closer to expiration, if that option, that $3 option got down to 10 cents or below, I could take the obligation off the board and then I can write another covered call. Well, now with no fees, I can do this at any time that I feel it's profit. And with the TQs trading at 73x, this thing is trading near real value, meaning the option is trading for $10.25, right? That option I got paid $3 has $3 of time value. There's no real money when I place that trade, right? The stock's trading at 61x. I write the 63.50 30-day trade for $3. Well, the option's worth $3. There's no real money because the stock's not above 63.50. Well, now that it's trading above 63.50 and it's trading at 73 and above, it's all real money. And in this case, the TQs option that I got paid $3 is now trading for $10.25. When I do the math, when I take away the current stock price from my strike, the real money in the option is $10.24. The option is currently trading for $10.25. So think about that. The option is now trading just 1 penny above real value. So with no fees, I buy it back for $10.25 and I am immediately selling the share. So what's the difference? What does all that mean? Well, visualize it like this. With the option trading for $10.25 and the real money in the option from my strike to the current stock price is $10.24, there's 1 penny of time value that I will subtract from my $3 that I got paid. So what I'm going to do is buy this back for $10.25. I immediately sell the shares for 73x. I make nothing more than $63.50. But here's the deal. I end up keeping $3.04 of the original premium. I get my $63.50. I paid no fees. The money's back in my account and we're looking to do it again. Now that's a little more advanced. I love buying back my options early so I can take away the obligation and make another trade. Now, before I let you go, this video was about me showing you my process of looking at a chart, seeing if that stock is checking all the boxes off for me for a cash secure put. I love finding great stocks or my favorite stocks that are having a bit of a rough period. I'm going to use those indicators to determine if it's a good time to get a low entry purchase or a low entry cash secure put and profit from it. With the cover call trade, I hope you took away, it's important to do your homework. Know what you're investing in. See, I know all about the 3X Leveraged ETF. So when I make the purchase of buying the TQs, I know what I'm getting into. I know a lot of you won't play leveraged ETFs, but here's the deal. Once you learn it and understand it, you'll feel comfortable with it. With that said, the TQs did exactly what I wanted, and I didn't overreach. I didn't sell an out of the money 68, picking up 80 cents, and it never gets to 68, and maybe during that expiration period, TQs falls to 55, right? I don't want to hold that risk. I want to set my hurdles low, make the profit, and we move on. Now, I hope you enjoyed this video. If you like what you heard today, subscribe to the channel. And until next time, may all your covered calls be profitable.